Welcome back to Investing Talk Podcast.
Great to be back.
Today, we are really ripping open the financials and the forecasts for a company that's, well, it's sitting right at this crazy intersection of huge potential upside and, frankly, absolutely massive risk. Quantum Corp.
That's right. And our focus today is really on navigating this extreme volatility to help answer that critical question you're probably facing. Is this stock actually a good time to buy right now?
Yeah.
We've pulled together, recent financial reports, analyst ratings, and maybe most importantly, the ongoing legal filings to give you a clear, kind of rapid understanding of this.
Well, it's a high-stakes situation.
Definitely high stakes. Now, before we jump into all the hard data, if you find this analysis valuable, please just take a second to subscribe, like, and maybe drop a comment below.
Yeah, absolutely. And let us know if there's a specific company or maybe a sector you want us to look into for a future analysis. Just leave that in the comments. We really do try to build these shows around what you need. We do. Okay, let's start this investigation into Quantum Core with the fundamentals. The numbers, well, they tell a story, don't they?
They certainly do. And it's a story of a company under some pretty intense stress, which is vital context for understanding the risk profile here.
So tell us the state of play. What are the recent financials really telling us about the core health of Quantum Core?
Okay, so the primary takeaway is financial pressure. The trailing 12 months or TTM revenue, it's sitting at $266.08 million.
Okay.
And crucially, this is actually a step backward from their full fiscal year 2024 revenue, which was $274.06 million.
So a decline.
Yeah, that works out to about a 12.05% decrease year over year. Not insignificant.
Revenue shrinking is bad enough, but looking at the bottom line, I mean, the net losses seem staggering, especially relative to the company's actual size.
They are. TTM net income is a negative $112.4 million.
Wow.
Now, management's defense, they say they're in an aggressive investment phase, restructuring, spending heavily on growth initiatives to try and capture future market share.
Okay, the standard growth story justification.
Right. But here's the stark reality for investors. The market cap is only $119.87 million.
Wait, hang on. If they lost $112 million over the last year, and the company is only valued today at around $119 million, are we basically saying this company lost nearly its entire market value in just 1 year?
Yeah, that's pretty much the math.
That's not just financial stress. That sounds like it's bordering on an existential crisis.
That really is the challenge, isn't it? Sustaining net losses of that magnitude when your total capitalization is so tight. It just means any bad news, any slip up, any delay in execution puts immense pressure on liquidity and on investor confidence, obviously.
So given that, that really grim financial picture, why are we even looking at this? Where is this supposed bull case foundation hiding? What's the positive spin?
Well, it's hiding in the technology and the specific market they serve. Quantum Core isn't a newcomer. They're an established leader in enterprise video data storage and management. And they've quite strategically positioned themselves in these high-growth, kind of mission-critical verticals. Specifically, think about the infrastructure needed to manage massive volumes of AI-driven unstructured data, and also complex surveillance analytics platforms.
Right, those are huge growth areas. AI, big data, surveillance.
Exactly. This is a secular growth trend that really isn't slowing down.
Okay, the narrative is compelling. I'll give them that. Connecting themselves to the future of AI and big data. But what actual products give them a defensible competitive edge, especially against, much larger competitors?
Well, their key differentiator seems to be specialized innovation, really focused on speed and scale. Take their myriad all-flash file and object storage platform, for instance.
Okay.
This isn't just generic storage. It's specifically built to handle the kind of high-speed ingestion and processing that's, frankly, the single biggest bottleneck for training these massive real-time AI models. That capability, that's their unique selling proposition in what's a highly demanding segment.
And what about the unified surveillance platform you mentioned?
So that platform leverages their deep history, their expertise in video data management. It basically allows enterprises to handle these enormous streams of video data that you need for complex security and analytics applications, things that demand both, huge scalability and lightning-fast retrieval.
Got it.
Combine that with their existing installed customer base, plus specialized software for things like data lifecycle management. Well, these technologies start to create pretty significant switching costs.
Oh, the lock-in effect.
Precisely. Once you're integrated into their specialized ecosystem, it becomes expensive and, frankly, pretty disruptive to just leave.
Okay, that structure makes more sense now. Deep losses, shrinking revenue,
Mm,
but specialized tech targeting these really hot secular trends. All right, let's shift gears. Let's talk investor optimism.
right.
The financial setbacks are clear as day, yet some analyst targets suggest, well, massive upside. What is the street actually looking for here?
Fundamentally, they're looking for flawless execution of a turnaround. It's as simple and as difficult as that. The consensus analyst rating is actually just hold, which reflects the uncertainty.
Yeah, whole boat.
But that rating comes with this expectation of radical change. The average 12-month price target is, well, it's a staggering $19.
$19 from where it is now. That's more than double the current price. That implies a huge amount of faith in a recovery.
Absolutely. That represents a potential plus 103.8% upside from current levels. Massive. But here's the really crucial insight you need to grasp. That $19 target. It's basically based on the assumption of near zero execution risk.
Which sounds unlikely, given everything we just discussed.
Exactly. It prices in that management somehow successfully resolves all the legal clouds, hits that aggressive Q2 EBITDA target we'll talk about, and just flawlessly leverages the structural growth in AI data management. It's a best-case scenario baked into a price target.
That potential, though, even if it's a long shot, definitely attracts high-risk capital.
Okay, let's look at the charts. What do the technical signals suggest about the immediate volatility and the momentum?
Well, the charts are basically screaming volatility. The 52-week trading range it's almost unbelievable. It stretches from a low of $2.88 all the way up to $90.64.
$90, wow.
Yeah, and just looking recently, like trading on October 23rd, 2025, the stock bounced between $8.91 and $9.68 in a single day. So this isn't some sleepy buy-and-hold investment right now. It's a constant high-stakes trade based purely on sentiment and news flow.
That range isn't just volatility. That sounds like a heart attack on a chart. What drove that massive spike and then the crash within the last year? And where are the technical pressure points we should be watching right now?
The huge swings are tied directly to news cycles, things regarding restructuring, those partnership rumors we'll get to, and of course the regulatory issues. Right now, technically speaking, the stock is clearly situated below its 200-day simple moving average.
Okay, the 200-day SMA, where's that sitting? It's up at $13.24. So the stock being way below that confirms that a clear medium-term downward trend is still firmly in place. That $13.24 level, it acts as a massive psychological and technical ceiling right now.
Okay, so definitely deep in bearish territory medium term. What does the shorter term chart need to actually show to signal maybe a potential tactical entry point?
Well, looking at momentum indicators, to really change the immediate downtrend narrative, the price has to successfully push and hold above $9.39.
939. Okay, key level.
That's a key near-term resistance level. If it can trade clearly above that point for, say, several days, that would signal enough accumulation, enough buying interest to potentially challenge the next level of resistance. And maybe, just maybe, build the momentum needed to eventually approach that crucial 200-day SMA way up at $13.24.
And right now, the relative strength index, the RSI, it's hovering around 44.96. Pretty neutral.
Exactly. That neutral reading suggests we're kind of in a holding pattern, currently waiting for some external news, a catalyst to push it decisively one way or the other.
And with volatility still exceptionally high, I think you said 15.78%.
That's right.
Any news event, good or bad, is likely going to lead to a really violent swing.
Which brings us neatly to the serious headwinds. We absolutely must dedicate enough time to the risks here because, frankly, they are potentially existential for the company.
Right. This is where we really transition from talking about high potential to, well, the high probability of failure or at least continued struggle. What's the immediate regulatory risk concerning Nasdaq?
The immediate risk is critical. It's about maintaining their actual Nasdaq listing. Quantum received a non-compliance notice because they delayed filing their Q2 10Q report.
Okay, a late filing.
Yes, but this lack of timely reporting really compounds the situation because it comes right on the heels of a prior and, frankly, highly damaging financial statement restatement.
Ah, okay. So the Nasdaq non-compliance notice isn't just some minor administrative hiccup. It's more like the market essentially putting the company on financial probation because management already demonstrated issues with the integrity of their accounting.
That's a perfect way to put it, precisely. And trying to deal with a Nasdaq warning while simultaneously trying to manage those massive net losses and execute a huge growth strategy, I mean, it puts an almost unsustainable amount of pressure on the current leadership team.
And then layered right on top of those financial and regulatory risks is the legal turbulence, which seems tied directly to the integrity of the books. What are the specifics of those legal challenges?
This is perhaps the most serious challenge they face right now. Multiple law firms have actively initiated recruitment for investor class actions.
Class actions, okay. What are they alleging?
These actions allege securities fraud, and it's tied directly to improper revenue recognition practices, the very practices that forced the earlier financial restatement we just mentioned.
So this isn't just about, say, failing to execute on a business plan. This is about investors alleging they were actively misled about the company's fundamental financial health.
Exactly. And that kind of allegation, true or not, absolutely destroys trust.
So how can management possibly focus on accelerating product innovation, which, as you said, is what they absolutely need to do to even dream of hitting that $19 target when they're fighting these existential legal fires and regulatory warnings? Seems impossible.
Well, it requires extreme focus, that's for sure, and we are seeing management respond, at least publicly, by emphasizing execution and product leadership. They recently appointed Jeff Barrell as the new Chief Product Officer.
Okay, new CPO.
The stated goal there is to aggressively accelerate product innovation, essentially to try and prove to the market that the underlying technology value is real and that they can stabilize the business, hopefully mitigating some of the pressure from all the regulatory and legal uncertainty.
So the entire investment thesis really rests on management's ability to somehow navigate these massive distractions while at the same time hitting some pretty aggressive financial targets. Let's talk about those targets. What are the specific dates we need to watch in the coming weeks? The ones that could determine the immediate future for Quantum Core.
Right, November is absolutely the decisive month here. It feels like a true inflection point is coming. There are two key financial results dates that every single investor must circle on their calendar.
Okay, what are they?
First, the next earnings date is expected on November 12th, 2025. Analysts will be looking very closely here for clear sequential improvement, just showing that the restructuring efforts are starting to yield some results, even if they're minor ones.
Any sign of progress. Okay, and the second date? That one sounds arguably even more critical.
It absolutely is. That's the fiscal Q2 2026 earnings announcement, which is expected around November 30, 2025. Now, this day is critical because management has set an explicit, very public goal to reach break even on an adjusted EBITDA basis by that point.
Break-in adjusted EBITDA, that's the big
It's
one.
huge. Hitting that target would be an incredibly powerful signal that their cost control measures are actually working and that the underlying business model is potentially viable. That would go a long, long way toward restoring some confidence.
And, of course, we can't ignore the whispers, the buzz circulating in the investment community. Are there any unconfirmed rumors floating around that could act as a significant, maybe high-impact catalyst ahead of these dates?
Oh, the market is definitely buzzing. There are persistent, though unconfirmed, rumors suggesting ongoing OEM partnership talks. Think large enterprise storage vendors.
Like major players.
Exactly, major players who could instantly validate Quantum's technology and potentially provide a massive injection of capital, or at least stable revenue.
That would be huge.
It would be transformative. There's also renewed speculation, just given the current heavily discounted valuation compared to their specialized tech, about potential takeover interests.
Makes sense. Low price, valuable niche tech.
Right. Now, if either of these rumors, the partnership or the takeover, were actually confirmed, that would instantly be the kind of positive catalyst needed to propel the stock far beyond that $9.39 technical resistance level we talked about.
Okay, so synthesizing this really highly polarized set of data, I mean, deep losses and severe legal risk on one side versus cutting-edge tech and potentially 100% upside on the other. What does this all mean for you, the potential buyer? What's the appropriate investment horizon here?
Well, the overall bullish rating we're seeing, around 7.5 out of 10, despite all the negatives, suggests this is really only suitable for sophisticated investors who understand the risks. We're essentially looking at two distinct types of buyers here.
Okay, who are they?
First, you've got those looking for near-term tactical positioning. People basically making a bet ahead of these November catalyst dates, right? Betting on either the partnership rumors panning out or maybe a positive earnings surprise. High-risk, short-term play.
Right, the speculators.
Kind of.
Yeah.
And second, you have the long-term investors. These are folks who are laser-focused solely on the secular growth story, AI, data analytics, infrastructure, and they're willing to accept all the current turmoil as simply the price you pay for potentially massive returns 5, maybe 10 years down the line.
Yeah, this is absolutely a textbook, high-risk, high-reward situation, no doubt about it.
Absolutely. Quantum Core offers strong exposure to major undeniable growth trends, and it has that staggering upside potential, largely fueled by those aggressive analyst price targets.
What?
But this potential is aggressively paired with extreme execution risk, the immediate threat of Nasdaq noncompliance hanging over their head, and those ongoing, very serious legal headwinds tied directly to securities fraud allegations. You cannot ignore those.
Which brings us right to the final provocative thought for you, the listener. Given this massive volatility, the looming legal deadline of November 3rd for the class action lead plaintiff, and then those critical earnings and break-even goals later in the month.
Yeah.
The really tough question for you is this. Do you enter tactically now? Essentially betting that maybe those partnership rumors are real and that management can somehow pull off a positive earnings surprise against all odds. Or is the risk just far too great? Does that compel you to wait on the sidelines for management to successfully clear the Nasdaq compliance issue and actually deliver on that promised break-even adjusted EBITDA before you even think about committing your capital?
It really comes down to risk tolerance. Every investor has to rigorously weigh their own tolerance for, frankly, existential risk against the undeniable lure of that potential triple-digit return.
A tough decision indeed. Thank you for tuning in to Investing Talk Podcast.
Thanks, everyone.
We'll catch you on the next analysis.